Hope you had a good weekend and are ready for an exciting week of earning reports. As I mentioned in my video on Friday, this is the unofficial start of the earnings season with a slew of companies reporting earnings. Tomorrow before market, Delta Airlines, JP Morgan, Wells Fargo, and Citibank will be reporting their earnings for the quarter ending December 31, 2019. In this video, I will look at Delta Airlines and see if there are any opportunities to trade. As usual, let's start with the analysts have to say. According to the Wall Street Journal, the current analyst consensus is a moderate buy, with 13 analysts rating the stock as either a buy or an overweight, with 7 analysts rating the stock on a hold position. There are no underweight or sell recommendations on Delta Airlines going into earnings before market tomorrow. While the buy and overweight rating has remained the same over the last 90 days, the hold rating has decreased. 3 months ago, 9 analysts recommended hold, while today it's 7 analysts recommending the same position. This is suggesting a positive outlook of the airline by the analysts. Analyst average price target for Delta Airlines over the next 12 months is $67.05, with the most optimistic price target at $90 and the most pessimistic target of $59. Given that the stock closed at $59.24 on Friday, January 10th, the stock is very close to the analyst's lowest price target. Again, it seems that the analyst's outlook for the company is on the positive side. If the stock were to hit its highest target, that would be just under a 52% upside, and even at the average price target, the upside would be over 13%. And if the stock were to decline to the lowest target, it's a downside of less than 0.5%. Of course, just because the analysts have placed a value on the company doesn't mean that the stock will behave within that range. You would want to research the company before taking any position in the stock. Now let's look at the earning estimate for Delta Airlines. The estimate for the upcoming report is $40, which is 8.67% higher than the estimate for the same quarter last year. And in that quarter, the company announced a slightly better than expected earnings. The airline has beaten expectations in the last 4 quarters. The estimate by the analysts for the next few years is also positive with an increasing EPS. However, keep in mind that the further you get in time, the harder it becomes to forecast. It seems the analyst's forecast is positive for the company, so let's see if there are any trade opportunities for the earnings. Looking at the standard deviation, the stock is close to the mean. Selling an iron condor could be a possibility here. This analysis is based on Friday's close, and the strategy may change near the market close depending on the stock price at the time. Also, this is not a recommendation to place this trade. Please research the opportunity yourself before deciding on any trade. To decide on the strike price, I start by looking at the market maker move prediction, which is point A, as well as the implied volatility price movement calculation, which is point B. Generally, the IV calculation is higher than the market maker move, and I take the higher of the two to decide on the strike. Based on the possible price movement of $2.34, will give us a low price point of $56.90 and the high price of $61.58. This will give us the short strike of $56.50 and the short call strike of $62. An iron condor at these short strikes with a $1 spread will generate a 23% return in a week, assuming both sides expire worthless. While both these strikes fall outside the predicted price movement, note that this is a mathematical calculation and the actual price movement is not bound by this range. The price could stay within the range, but could also move outside of the range. Mathematically, there is over an 80% probability that these short positions will expire worthless, which is what we want. However, the opposite means that there is a 20% chance that one of these positions will be in the money on expiration. And also notice that the short call is above the resistance level, giving the call position some breathing room. However, the support level is below the put position. If the stock price were to decline, it is possible that it could go below the put position. Of course, the price could also increase and go above the resistance level, putting the call strike in the money. When placing any trade, you should also have a plan on how you will manage the losing position. What would your plan be if the position on either side is in the money? I will place a paper trade, not an actual trade, near the market close today. Hope this was helpful, and also take a look at some of the other companies that will be reporting earnings before market opens tomorrow, including JP Morgan, Wells Fargo, and Citibank. Happy trading, and I will see you in tomorrow's video.